Good morning out there. Enzo DiCostanzo, clinical professor of economics and finance at St. Peter's University, and now I can add this into my my introduction, economist at Pramana Capital of Pittsburgh and Naples, Florida. So we can add a little longer introduction into my titles now, doing the consulting thing a bit too. So today we're going to be working on a brief exercises for the cash chapter. So we've had a couple classes that are going to be on YouTube, and this is going to be one of them. So please watch these videos. We spent a lot of time making these videos and a lot of preparation. So take advantage of this and learn from the horse's mouth. Okay, let's get to the Excel, and we'll go through what we're going to go through today. Okay, folks, in the so for the day section in the template that says cash video, we have a lot of, this is our third video on this tab. So we're going to roll over. We did self-test questions. We did that. So here's the brief exercises. And we have the notes on the side. So this is all going to help us as we, it's more of a discussion than anything else today. The model building is, we're going to do a little bit with the, reconciling also. We have a reconciling problem. So for the first one, actually, folks, I apologize. I should have had the book up already. I did not. Yeah, we're moving through the chapters of this book. So you're learning a lot of things, which is good. Obviously, good news. There's brief exercises. And again, how I did yesterday with the merchandising chapter for the people who saw that video, we're just going to go through the objectives, identify fraud triangle concepts, indicate internal control concepts, explain the importance of internal control, identify internal control principles, identify the internal control principles applicable to cash receipts, make journal entries for cash overage and shortfalls, make the journal entry using cash count sheet, identify the internal control principle applicable to cash disbursements, prepare entry to replenish a petty cash fund, identify the control features of the bank account, indicate location of reconciling items in the bank reconciliation, identify reconciling items that require adjusting entries, prepare partial bank reconciliation, prepare partial bank reconciliation again, explain the statement of representation of cash balances, and then we have some review questions, and we'll see if we have time to sort of slide over to those also. And actually, just as we're here, and now that we've sort of thought about it, let's see the review exercises. How much is here? Yeah, this is just concepts. We could throw these in also. Let's see what happens. Let's do the brief exercise, and we'll take it from there. Okay, and I repeat a lot of the questions here in the Excel, so we don't have to worry about it. And I didn't delete the answers. At this point, let's just have the discussion. It says match each situation with the four triangle factor, opportunity, financial pressure, rationalization that best describes it. And then it gives you, and this is very much like a law class, where you're given a situation in the world, you have to apply the law, you have to apply a court decision to it. So that was time well spent in Queens College, for me at least. That was time well spent going out there and really learning from a world-class program, legal studies, where I wasn't necessarily a lawyer, but as close to it as you can get without going to law school. I was very fortunate for that experience. I'm grateful to the CUNY system for that. And employees' monthly credit card payments are nearly 75% of his or her monthly earnings. So that's, again, the application to the four triangles. That's your own financial pressure, is what that is. Okay, so if you've got those kinds of that kind of debt, believe me, people who've lived through, and I was very fortunate where not a very long period of time, but a short period of time in my life where we did have, some kind of debt that we were dealing with. It can play on you, and especially people like us, where the old Italians, everything cash, 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 right? There's no such thing as debt in the old school immigrant Italian communities in Newark. Right? They had no room in their lives for debt of anything. But the four triangle has three pieces. And you've probably seen this in other videos. We'll just repeat it here. Opportunity, financial pressure, and rationalization. With financial pressure, it says employees sometimes commit fraud because of personal financial problems caused by too much debt, or they might commit fraud because they want to lead a lifestyle they can't afford. And yeah, I mean, those, and we were just talking about it yesterday in the office in New York. You know, we worked with a guy years ago who want expensive restaurants and all the vices that go with a lot of money, and first class tickets on British Airways, and nothing against all that stuff, but if you're constantly using investor money instead of sort of, you know, what it's supposed to be used for, or using it excessively, or abusing that privilege of having access to those bank accounts where, you know, the people who are investing said, yeah, you know, spend what you need to spend on expenses, but you're bringing it to the nth degree. I'm not that way. If I had $1,000 in the bank or $10 million in the bank or something in between, even, you know, I think I'd generally be very similar in my living, and the people and you're going to find that when you're working, you got to find people where it's a similar philosophy. You may not want to admit that maybe early on, but you have to find people with the philosophy is similar. If everybody's sort of a socialist, you know, and you're a capitalist, that may not be a marriage. You know, it's got to be a similar view of the world and religion and spirituality and, you know, work-family balance and, you know, all these different. Yeah, you got to have similar philosophy, because generally, I mean, it's unusual where a work situation where there's a constant clash is going to work. I mean, sometimes it can, you know, and I'm open-minded where I'm always up for debate or open for debates, but it's rare that works in terms of employment, or, you know, working on a venture together or something like that. That's rare that kind of thing meshes. Again, I've worked in you know, very sort of, you know, foot to ground situations where it's not some big, very impersonal bank or something like that. It's you know, where you know the people who are making the investments, and you're eye to eye with them, and you're having a drink with them, and you're having dinner with them, and you're doing a lot of things like that. And I always felt you know, when it's more personal like that, I always felt a responsibility to that person to say, hey, you know, we're investing your money, we're doing the right thing by you, you know, countries or whatever it may be, governments, you know, in smaller countries. I always felt that responsibility. So certainly with financial pressure, if you have this idea in your head of how you want to live, and so many people do, you know, but folks, I'll tell you, you do a good job, you know, you're good to work with your coworkers, you're good with your family, you do something useful every day, everything else should sort of take care of itself. I'm a big believer in sort of what's going to happen, needs to happen on its own, so to speak. So, you know, be comfortable sort of with what happens. I always am. And it's generally, I've rarely been disappointed with thinking like that. But financial pressure is certainly something that applies to the first case. The second case is an employee earns minimum wage at a firm that's reported record earnings for each of the last 5 years. And it's easy to say, you know, it's easy to say to yourself, where's mine? You know, kind of a thing. You know, saying, hey, I worked so hard, and I do this and do that, and got on a plane to Washington, and, you know, took the train down there and drove down there, and all that kind of thing. It's easy to that's any criminal pursuit is easy. Well, yeah, I've been treated unfairly by society, right? All those kinds. That's a lot of the reasons why these bad things happen. So rationalization applies to this, where, and that's the war cry of many, someone who's gone afoul of the law. You know, society isn't fair to me, and I got to get even somehow. And you use a work situation to do it. And I'm stunned at the things that I read. People who run unions, and people who are sheriffs and whatever, different counties in New Jersey, and all the different things these people do have these tremendous pay packages and benefits for life and healthcare for life, and you're jeopardizing it with doing dumb stuff, or, you know, to steal $50,000 somewhere. You know, now there was a situation I've mentioned in class many times. The treasurer, or a woman who worked in the treasurer's office at one of the universities, not Rutgers or NJIT or Princeton or Stevens or us, but somewhere, I forget the school, but it was a little school in sort of the middle of New Jersey somewhere. And she worked there for 18 years and stole like $1.5 million from the school. It was amazing. And I was discovered when she went on vacation and someone picked up her job for 2 weeks, and that's when it was sort of discovered. So yeah, that again, when there's money involved and transferring money and wire transfers and bank accounts and whose name is on the bank account, it can get very slippery, very quickly. So like I said, you got to be careful with that. And employers' expensive gambling habits, all of these. If you're going to have a federal job working at the Federal Reserve or the Treasury or something like that, those guys are going to want to. Those guys are going to want to know if you've got a lot of debt, or if you've got some kind of situation that someone could take advantage of you because that situation exists in your life. They're going to want to know. Certainly the Federal Reserve, certainly the Treasury. So that's just something to keep in mind. Where if you're going to go for some of those jobs, you really want to have a clean credit record. And it's unfortunate, but I ran into students at St. Peter's who really destroyed their credit, before their 21st birthday somehow. And it was a relationship, and somebody needed a car, and we did this and we did that, and we were in love, and we were going to get married. We bought the car together, and he left me, and whatever, all these other things. And I've heard those kinds of stories a couple times, and it's a little funny, but it's not pleasant to hear that, and certainly ruining your. Now, the good and the bad of it is, if it's a Toyota, I doubt they're going to be sitting across from you in the civil court situation. But certainly there's going to be a consequence, and your credit will be damaged, and all those kinds of things. Your credit rating, rather. So you want to avoid that. It finds its way into your life. Okay, you want to be very careful, with that. So financial pressure. That's another. Gambling habit is another financial pressure. Employees check writing and signing responsibilities for a small company, as well as reconciling the bank account. So keeping the records and making the transaction yourself, those can be very, very dangerous situations. Certainly that it presents an opportunity where someone could take advantage, that they're tempted. But hey, you have good Catholic spirituality and good Roman Catholic values and ethics. These things should, I'm not tempted at all to double cross somebody or swindle somebody. I'm just not, because I know the consequence is long-term very bad. So I want to do it honestly in the right way. And that's why people chase me down. I feel flattered and honored that St. Peter's sort of came to me and said, "Hey, come work for us." And the Dolan family came to me and said, "Hey, come work for us." And I love that. And that's people knowing you and staying in touch, and that all helps when those kinds of things happen. So that's the identify the 4 general concepts. So you have these 4 situations, and you have to apply the concept as in terms of the 4 trials. What's going on? Okay, like I said, very legal type thing. The next one, it says Angela Kinsey has prepared the following list of statements about internal control. These are just true or falses. One of the objectives of internal control is to safeguard assets from employee theft, robbery, and outdoors. Yeah, it says robbery, should be burglary, but okay, robberies, I guess. Robbery is the legal term. Robbery is you're knocking somebody over and taking their purse. Burglary is stealing something, and theft is the amount of stealing something. But people who don't have a legal background put robbery in there, but it's not. It's burglary, but that's fine. At least in New York State it is. That's true. One of the objectives of internal control is to enhance the accuracy and reliability of the accounting records. So actually, this is twice here. Enhance. Yeah, there it is. The accuracy. Actually, I need to change that in here in the my master file. And like I said, it's nice to have these extras here, right? So you can always fix your master file, because it's sitting right here for you. And then we have 2 of these for some reason. Yep. Okay, we're good. So so objective internal controls, yes, that's true. No laws require the U.S. corporations to maintain. That's false. There are laws that make U.S. corporations maintain an adequate system of internal controls. You can't have a company unless you keep records, and when people play games, again, I keep thinking about a certain person who's certainly I'm not going to name, but and all the games like I played, and all of these, it's just flies in the face of everything we're talking about here. All good accounting practices. This person had no room in his life for, and let me tell you, it came back to haunt him, right? Because he got pushed out of a nice situation that I certainly am grateful to have access to again, and you know, you shoot your own foot off, and it's just the dumbest thing, just the dumbest thing. Take care when you have good relationships. Take care of them, and if you take care of them, they'll take care of you. And that's really the truth. The guy who worked on my roof told me this. He's a construction contractor, and he says, that there's always karma, and it's true, right? There's always a lot of good karma that's out there, and you always want to, you always want to be aware of that. That all the stuff you do sort of finds you at some point, and you want to be very, very aware of that. So, but yeah, certainly keep track of what's going on. New owner of Ready Parking, and folks, think about Ready Parking. How many parking garages and basements are there in New York City? And there's an operator in there, many, many, many. And there's a lot of cars in and out of there. And again, you got to keep records of the credit sales, the cash sales. The 4 purposes of internal control, and to give her one application of each purpose for Ready Parking. So, yeah, safeguarding assets, enhancing the reliability of accounting records, increase the efficiency of operations, ensure the compliance with the laws and regulation. You can't run an unlawful business. You can't. You just simply can't. Yeah, and actually, these are components of good internal control systems. And these are methods and measures. So those shades of words. So this was the 4 triangle was up there, and there's the principles over there of that. Safeguard the assets, segregation. Actually, no, safeguard is up here. Control activities are here. Let's just fix this typo. Those are the 5 components. These are the principles. Manage risks, control activities, communication. Yeah, it doesn't. These are components. This is the 4 triangle. Okay, here it is. Yeah, here's related methods and measures. Safeguard assets, enhance reliability, increase efficiency. There it is. Okay, yeah, folks. These are the methods and measures. These are components. 4 triangles. So you got to sort through it all as you go. Yeah, safeguard the assets, enhance the reliability, increase the efficiency, ensure compliance. Yeah, okay. And we can go through all that and sort of list the purposes as we go through all this. Obviously, you want to safeguard. If you're managing money, you're managing assets, and you can't just take them yourself. That's right. That's a big piece of it. Again, they're using robbery and theft, theft, burglary, whatever. Okay, like I said, robbery is you're walking down the street, you knock somebody over, and you take their purse. That's you take their money and their cell phone, that kind of thing. That's a robbery. A theft is just somebody leaves their cell phone on a table, you just take it without any physical violence involved. Low or high level violence. And yeah, they use the Ready Parking example here because again, any big city, Newark, whatever it may be, is going to have parking decks and things like that, parking systems. So yeah, so you can't steal a garage. There's money in there, and you can maybe steal the cash, that kind of a thing. So, or if it's a plane leasing company, you can't just take your family to Hawaii with the plane, and the guys are at the airport saying, "Where's the plane?" And you're a pilot for the private plane company, and where's plane 5 in Hawaii somewhere. So obviously you can't do those things. Increase the efficiency of operations, ensure the compliance with laws and regulations, enhance the accuracy and reliability when it comes to accounting records by reducing the risk of errors, unintentional mistakes, irregularities in the accounting process, and application for Ready Parking is preparation of bank reconciliation. Okay, so you have all those. All these purposes are important to the success of a business endeavor. That's true. Explain the importance of internal control. Number 4 goes through the And number 4 goes through the components. No, not the components. It goes through the principles. Yeah, segregation of duties and all that other stuff. So it goes through the principle to that. Okay, so there's just a couple here. Physical custody of assets don't access. Yeah, so again, you can't have somebody who has access to the records and the physical assets type thing. There's going to be different people. Having an independent internal verification of anything, making sure that no one's skimming is the street word for and with nobody getting wise, right? That's the street way to say it, right? Skimming so no one gets wise, and that's and independent internal verification is somebody who sort of dispassionately looks at sort of what's going on. Pre-numbered shipping documents, again, any kind of paper records, and folks, if there's docs or whatever. Now look, the Port of Elizabeth, or whatever, maybe the Port of Newark. And there's merchandise coming in and out of there. It's got to be barcoded, and the documentation's got to. Sure, if it's electronic documentation and electronically barcoded, let's say televisions coming in from Asia or something, obviously that's something that's very tempting for people working there to just take one or take 5 or 10, or depending on how big your family is. So certainly, video monitoring and having checks and balances the whole way is certainly an important piece of this. So in terms of these procedures, you have segregation of duties, independent internal verification, documentation procedures, all very important based on all of these situations. And I'd like so you guys can look through that. And here's the 6, again, we just threw the principles down here. So we're not bouncing around the notes saying, where is it type thing. There's the 6 principles of internal control. Again, establishment of responsibilities, segregation of duties, documentation procedures, physical controls, independent internal verification, human resources controls. Okay. We're up to number 5 in this thing. It says Kate Flannery Company has the following internal control procedures over cash receipts. Identify the internal control principles that are applicable to each procedure. Over the counter, register with cash registers. Cashiers, all cashiers are bonded. Daily cash counts are made by the cashier department supervisor. And it says, identify the applicable internal control principle for this. And I've used this story a couple times. When I went to Fordham to business school, I had a woman who sat next to me who was started as a cashier at a place called Chelsea Piers. And this was her job. Her job was, everything was talking about this chapter was her job. And she was from, I think, Trinidad, and, was very trustworthy, went to St. Francis College, I think, in Brooklyn, and worked in this area as a cashier, and then became a supervisor, and then whatever level, there's several levels of supervisors out there. She made sure that what was in the drawers matched the records and that type of thing. So she had physical control, but also was able to check. Now, she wasn't in charge of the record keeping, but certainly was able to check in with them and saying, look, the electronic record is this, the physical record is this, and making sure that those things are the same, okay? Or if they're not the same, why they're different, and have that be explainable. So over-the-counter receipts are registered on cash registers. That's a physical control. Cashiers are bonded or insured is another word. That's a human resource control. Daily cash counts are by cashier department supervisors, independent. So it's not the cashier counting the money, it's the supervisor counting the money. ShopRite, right? You go to ShopRite to shop for your groceries, or Walmart, I'm sure they have similar procedures. The duties of receiving cash, recording cash in custody or assigned to different people. That's segregating the duties. And only cashiers may operate the register. So again, only this person touches it type thing. And so if there's a problem, we know who it is. That's why. Okay, that's why that's that way. Okay, that was number 5. Number 6, number 6 is a good one. Let's look at number 6. Number 6 says the cash register tape for Kelly Kapoor Industries reported $6,891.50, and the journal entry. You're looking for journal entries when there's excess cash, or when cash is either over or under by $50 or $20, and let's see which one is which, as it exceeds cash. So cash to be accounted for, the record says exceeds the cash on hand by 50, so the cash might be short, and the cash on hand is over the electronic record by $20.32. Okay, so overage and shortfall entries, and we're going to look at that. And again, you're looking in the physical. This refers to the physical, not the electronic record, but the physical count. So Yeah, so this number appears in both places. All right, so the electronic record is this number. That's the electronic record. It's $6,891.50. Okay, and we write that, or that's got to be entered there one way. Let's just look at the first one. It says cash we accounted for exceeds cash on hand by $50.75. Yeah, it says cash exceeds cash. Yeah, so like the electronic record is $50 more. So the actual cash is $6,840, and you're short. You're short by $50, right? Oh, good. You're short by $50.75. Okay, so the electronic record is $6,891.50. Your physical count is $6,840.75. So you're $50.75 short. Okay, no good. All right, so we don't like that. So that's a shortfall, is what that is. So, and you can see these, the shortfall plus the physical number add up to what the electronic record should be. And you got to figure out what happened. Did somebody skim $50? That's what this is. Here, and look at this is debit side for the short. Here's cash over by $20.32. And again, looking at what you're looking at here, your reported number, what's supposed to be your reported number is $6,091.50, but you count up $6,919.82. That's $20 more. So, well, how do you get all these numbers? Well, it's going to be this thing, right? Look at these sort of added up, gives you that, the number that you actually have. Or you could subtract, right? That's another way to do it. I might quickly do that with some italics and just doing a little checking for us. You can say equal that number subtracted the revenue number. Yeah, there's your check. Okay, so you're $20 over. So there's either there's a record mistake somehow, and you got to be a detective, and you got to track down why this is happening. All right, so you're recording. This is what it's supposed to be, allegedly, but there's $20 more. So is there a mistake here? Is there a mistake here? Is there money left over in the box from a previous shift or something like that? So you got to sort through all that. Okay, not simple, and interviewing people and who's being honest and video surveillance, and it gets messy. Okay, but these are the journal entries for cash overages and shortfalls and what that looks like. Examining cash receipts. So yeah, here's another one. 7 says there's an open cash balance 150. Cash on hand is 1,125.74, and the register is 990.83. Prepare the required journal entries, and let's look at what's happening with this. So yeah, it started with 150. You did a physical count. You have 1,125 is what you have. Okay. Oh, what happened here? These numbers. These are suspiciously yeah. We somehow left the numbers in here. It's good we found this. So let's fix this. Yeah, how about that? Just, when you have a lot to do in life, those are we copy and pasted the previous numbers somehow. Okay, let's fix this. So yeah, it's good. Like I said, and I'll if you don't mind, I'll just pop open the solution manual just to make sure. How terrible! How terrible! But it's good we found. Like I said, it's good we're reviewing this stuff. So it's good we find these things as we go along. And that was chapter 5, I think. Okay, brief exercise number. Actually, I think this was number 8, not number 5. Yeah, the cash chapter. Yeah, so this number should be 990 type thing. That's what that number should be. Yeah. So we want that to be that. Okay, and we're going to start with some numbers here. We have 125 and 150. So yeah, how this all needed to start was actually what you should do. Just throw those numbers in there. So yeah, I'm working in the master file. So just setting your numbers up to work with these numbers so you can figure out what it is that happened here. How terrible. It's going over it now, so let's figure it out. So again, you want this to be that number there. That's what you want. Okay. And what you're going to do is you're going to sum here. You're going to sum these two. Okay, so the cash on hand and the balance, actually even better than that. And take this guy minus that guy. Yeah, 975 is really what should be. So if there's 150 in the drawer already, you got to have that 975 working for you. Yeah, that's what should be your cash. Okay, or the number, and looking at this, you are short on that, right? It's a shortage, is what that is. Yeah. Okay. And actually, here what we'll do. That's the short version of this, and we're going to fix this other one in a second. This is too much, and you got to write it down a bit. Again, it's all about perspective. This is the physical. All this is based on the physical. Count is what you're looking for. So yeah. So and we can do here. You can just do the math on this like this. This thing minus this. Okay. So yeah. And in terms of you started with 150. You're adjusting at 975.74. There's 150 in there, but the actual cash is 1,000. But there was already 150 in there, so that's what you should have collected. The register tells you it's 990. So in here, your miss in here is this. This is your miss of $15.09, and this is just the sum of those. Yeah. Okay. But also, you're short here. Okay, this is your shortfall. Is what that is. And we're going to drop that off in the, we're working in this one, so we'll just drop that off in here. Yeah. Okay, so you have that. So you have those numbers. And just to make life simple, because we already figured it out here, we'll just pull this whole thing and we'll just drop it. Yeah. Yep, there it is. Okay. Yeah, folks, I apologize for that. But like I said, it's good we caught it, before this all sort of went out to press. So we found what we needed there. But yeah, so you start with 150 in the draw. You measure 1,125.74. So you should have 975. Your adjustment should be 975, but your register tape says 990. So you're $15 short and some cents. Okay, that's how you work at number 7. This is more sort of thinking here. So this is number 8. It says Mindy Kalin Company has the following internal control procedures over cash disbursements. Identify the internal control principles that is applicable. Pre-numbered checks and reconciling the monthly statements with an internal auditor, and bank checks are stored in the safe in the treasurer's office. Only the treasurer can sign a check, and who could record cash disbursement. Where check signers are not allowed to record the disbursement transaction. So you're breaking the jobs up a bit. So certainly for number 5, segregation of duties. That And again, I put the principles down here, so I'm not searching for them in the notes. Okay, documentation procedures, independent internal verification, what a physical control is, establishment of responsibilities. Art, right? Art can be very be worth a lot. It's an asset, right? And that's not so liquid, but it's an asset. So, you know, it's got to be controlled, right? It's got to be controlled, and um, checks, anything that you can turn into money, you got to guard. Okay, so that's your internal control list again. Identify the principles applicable to the cash disbursements. Now we get to the more numerical ones. Number 9 is Toby's petty cash fund is $100. Replenished when the fund contains 7 in cash, and receipts for the postage is 52. Freight 26. Travel expenses 10. Prepare the journal entries and replenish the. Yeah, this is replenishing the petty cash fund. And we'll hope that we have the right numbers this time. I think we do. Yeah, I apologize for that last time. Okay, but yeah, the short is like this, and the yes. So yeah, and again, let's make sure that we label here as we go. Short cash, right? It's all that. Okay, that's short. And similar here, right? This is short. And let's, again, in our master file, let's sort of make sure we label all that too. Oh, so we're here with this one, and it says there's a freight out expense, $26, travel expense, 10, receipts for postage, 2 or 52. Okay, and the fund, it's a $100 petty cash fund, and it's replenished when there's $7 in it. Okay, that's really what needs to happen with that. And yeah, we have a check there, which is all well and good, but we're going to do this. And we want to make sure that all that 88. We don't know what the real expense number is. It's only 88. Okay, so if we're saying we're down to 7, right, it really should be at 12 at this point. But so somehow there's an extra $5 taken out of there. And again, so if you're saying, hey, we're at 7 or we're 93, right, is really what we should be at. There's an extra $5. It's not in here and not in these 3 legitimate legitimate expenses. Okay, so it's short by 5, and you're putting it in there, and say, okay, well, we're counting for that now, and you're doing the 100 minus 7 to give the 93. But yeah, so you want to watch that. Okay, so that's how to journalize this. And again, it's taking what happens in life and making a journal entry out of it. Okay, very important. So yeah, there's the petty cash fund, and that's replenished. Okay, so it's replenished at $7. So we're doing that. All right. Let's see. There's 15 of these. Oh, this was number 9. Number 10 says Creed Bratton is uncertain about the control features of a bank account. Explain the benefits of a check. Explain the benefits of a bank statement. Check provides documentary evidence of the payment of a specified sum of money to a designated payee, the person who gets it. The maker is the person who makes the check. The payee is the person. When you get paid, you're the payee. A bank statement provides double record of disclosures of bank transactions, usually making periodic independent bank reconciliations. Okay, that's it. I mean, that's record keeping and being organized. That's stuff I preach all the time. Okay, and so 11 and 12. Yeah, 11 and 12 is just a discussion as to the structure of what we're using here to reconcile our statements. This says Flenderson Company. There's a couple reconciling items, outstanding checks, different bank memorandum for service charge, and you got to think like a. Actually, what we should do here with this one, and I'll get it from another source here. Let's see, capital. Yeah, here's the capital account and the drawings and sort of how this all works. So we're going to just drop this somewhere for you. Okay, so you're here with this. Here, I'm just going to make it simple, $1, $1. This is just to show you how this all works. And okay, this works like this, where you have outstanding checks and memorandum and credit memorandum, debit memorandum. If you have a bank account, you're getting charged something, it comes out as a debit. That's why it's a debit memorandum. If you go to a bank account and your money's coming in, it's a credit memorandum. Collecting a note, or if you're loaning money and they're people paying you back, type thing, or you're getting paid, right? Your salary and wage or something. It comes on the credit side, type thing. Deposit in transit, things have to move around, and things are not instantaneous. That's for sure. Yeah, things are not instantaneous, so you got to keep that in mind. And then it says indicate other funds should be shown on bank records. Yeah, so it lists all of these, and then we have to say, so the answers are sort of here already on the right side of this little dash. But outstanding check, it's deducted from the balance per bank. Okay, so where do you keep track of this stuff? I sort of highlighted this stuff as we went along here. Okay, so this is the structure of this, and like I said, I'm just giving you from the ledger perspective and from the bank reconciliation document perspective. So for number one, deposits. And now we're saying number one, number two, number three here. Yeah, these two are, again, I have to apologize. These numbers are flipped a bit. Collection of note is 3. Service charge is 2. Yeah, these are flipped. I apologize. These are flipped. But hey, it's good we have outstanding checks is 1. Yeah, so that's. I'm sure there was another example somewhere where we had to deal with that. So we're fixing stuff as we're going through here, which I'm always happy about. Oh, so we're here with this, and again, outstanding checks are deducted from the balance per the bank. That means I wrote the check, and the bank didn't know it yet, because the person I wrote the check for, the person who was the payee, didn't go to the bank, their bank, and deposit it, type thing, or exercise the check option. Service charge is deducted from, again, books. That's me. The bank's charging me, and I'm not the source of the charge. I have to acknowledge a charge from someone else. So on my books, the books is the person. The bank is their records. Collection of note by the bank. Again, the bank's letting me know that I didn't make a collection on this debt, this liability, but they did it for me, and I just have to recognize that. And deposit in transit, again, that the bank has to. It's who needs to be notified. Deposit in transit and outstanding checks, the bank needs to be notified. Service charge and collection note, I need to be notified. So I'm the writer, the account person is the books, and the bank is their own records. The bank is just a computer. Okay, it's really nothing more than that. And this is the whole structure of how the bank reconciles your books. You reconcile. If there's errors, how you fix the errors, type thing. And we'll add and subtract as we need to. And there's the structure. And again, we've gone through in-class in-chapter examples of this stuff, but certainly it's always good to revisit it as we're doing here. Okay, it's a good spot to look at that. Indicate location of reconciling items in a bank account or in bank reconciliation. Okay. So now it says use the date in 11, which is here. And this was just a structure is what this was. This was nothing more than a structure. It will result in adjustments to the depositor's records, and while the other ones do not require adjustment. So yeah, so again, theoretically looking at the previous, and these are really good questions and really good concepts here. So it's good we're spending some time on this. It says the items will result in adjustments to the depositor's records. Well, reconcile anything that's books, right? So 2 and 3 are the books. All right, so it's the depositor's records are being adjusted here. And it says why the other items don't require adjustment. It says, well, deposits and transactions, outstanding checks, yeah, there are adjustments. It's automatic. Okay, so as we deposit money in an account, the bank recognizes that, or we write a check, we make the check, or we pay somebody, as the pay deposits that check in their account, it's automatic. That's really what they're trying to say. Certainly, all these are adjustments, but just we have to adjust ourselves for our records, our Excel sheet that we keep at home, which everybody should do, by the way. Never just trust that the bank is just right. Always check your records, a couple times a year to make sure. And now we have something with numbers. So we have 13, 14, 15. Yeah, there's 3 more to go on this, and we'll look at this. And this is just a portion. This is how the bank adjusts. And it says there's outstanding checks, and there's a cash balance per bank, and there's deposits in transit, and there's a service charge too. The information's thrown in there. But for Martinez Company, the balance per bank is $7,420. $7,420 is the cash balance per the bank statement. Deposit in transit $1,120. $1,120 is deposit in transit. So you add these up, which is right there. Sum at the summation formula. These are just entries. Anytime you see the blue font, it's just an entry. That's just an entry, right? Outstanding checks that we wrote, that we were the maker of, the Martinez Company was the maker of, this is going to come out, all right? Because someone's going to deposit that. Okay. And then after all of that, this partial adjustment is just this. It's the deposit in transit, the balance in the bank statement, and subtract out the checks. That's a partial bank reconciliation. Oscar Company has a cash. So this is sort of this is actually another one of these, but a little bit longer. And there's 2 more, that's it. These guys have cash per books. Actually, yeah, this is just the books part. We put the outstanding check in there, but we don't need. There's no room for it because we don't have this, and so this is all just not meaningless, but that doesn't apply right now. The books balance is $8,500. You collected a note receivable, and hey, why do I have 40 like that there? This would be checks 35, fine. Yeah, or charge for checks, $35, okay? Yeah, this is just interest earned, is all this is. Yeah, it's any checks for 800. Yeah, this was an entry. This was just purely an entry. You don't have the note. This is just the interest that's being earned on some financial instrument that's in there. Okay, so this is 8,540. This is 35. And this is, you sum all your subtractions, and now you have 8,505 is what you've got. That's adjusted cash balance per books. It's not going to match this because we don't have this. We have incomplete information up there. That's the partial bank reconciliation in terms of the books. This is in terms of the bank. And this one, Nunez Company has the following cash balances: payroll, plan expansion, cash fund. Yeah, on the balance sheet. Well, cash is a current asset. Plan expansion fund is a non-current asset. Assuming the fund is actually to be used in the next year. So yeah, so cash certainly is. Yeah, I don't want to say restricted cash, but 15,742 is your main cash number. If you're restricting some cash for 6,000 you're going to use as payroll, you're restricting that use, so you're not using it for something else. That's also a current asset. And then the expansion, anything the plant expansion fund, that's also restricted, but it's a non-current asset. Okay, so this is the same presentation of cash balances. All right, so I think we did an hour with these things. Yeah, I don't have the review questions here yet, but yeah, these are the brief exercises for the cash chapter. So again, we're having a YouTube class today. Today's April 24th, 2019. So this should satisfy the lecture for today. All right, I'll throw up another one of these for tomorrow. And so please, spend some time on this and go through the topics and learn, read. These videos take a lot of time and a lot of preparation. Spend some time on this and you'll be good with answering your questions for your final exam. So like Bill Belichick would say often, you win on Sunday. Bill Belichick's the football coach for the New England Patriots. Winning on Sunday starts on Wednesday type thing. Okay, so just keep that in mind. Very important, very, very important. We're going to unhide ourselves here. There you go. Folks, please, spend some time on this. It was a good hour on questions for the cash topic, which is your final exam topic. So spend the time and go over this. It's always great spending time with you guys, even virtually. So